You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will be looking at expectations from the July 2025 MPC meeting. With me to have this conversation is Mr. Olumide Sole. He's the head Financial Institution Research, Renaissance Capital. Great to have you, and thanks for taking our time to have this conversation.
Yeah, thanks for having me.
Thank you. It's a big week. Today, the MPC meeting begins. MPC means Monetary Policy Committee meeting to our viewers, key meeting of the Central Bank of Nigeria. And we just got the figures last week of the inflation rate. It eased again to 22.22%. That looks like a good trajectory so far, but we're still very far from achieving single digits. How will this easing of inflation gradually shape the Monetary Policy Committee meeting approach?
Unlike what we've seen in the past, where the Monetary Policy Committee has stayed the course that is maintaining their hawkish stance, I think with this current inflation trajectory, we'll start to see some sort of easing of or cutting of interest rate by the Monetary Policy Committee. So we think this would definitely kind of give the Monetary Policy Committee confidence to be able to reduce interest rates, because we are now seeing interest, looking at the MPR with what inflation at around 22%, real returns is positive. So that's okay and good enough. So we should see the narrowing of that real return compared to what we've seen in the past.
We anticipate a cut in the
cut.
MPR. You're bullish on that?
Yeah, rate cut.
We hope so, because we've always had these projections that at the end we get big surprises. But that's by the side. One area of interest in the monetary policy stance has been the foreign exchange markets. And we've at least a lot of commendation has gone to the Central Bank of Nigeria in bringing stability, predictability to the foreign exchange markets, whether it's within that window of 1,550 to 1,600, exactly, so people can price in. But also, we saw that the net reserve is now about $25 billion. There was a time it was $3 billion, which is also good, but we need sustainability. We need it to even be much bigger than that to address any challenge. One other area that is of interest is diversifying our foreign exchange inflows. How can we achieve that at this time? Because that's critical as we try to attain sustainable economic growth.
So speaking of the net reserves at 24 billion, compared to 3 billion what we had as at, I think, 2022 or so. So looking at that, it's a significant jump, a significant improvement. I'll say we must commend the CBN for that. And the current administration has done a lot to bring that to where it is now. And one policy that we think is definitely responsible for this is the orthodox monetary policy. It gives investors confidence in the sense that it's certainty. Orthodox monetary policy is predictable. Investors don't like uncertainty. So it's certain. You can, to a large extent, predict what the CBN would do. So that kind of gives confidence to the investor. And that also reflected in the way we have seen investors react to the Nigerian economy as a whole, in terms of home markets and things like that. That's market activities. We've seen foreign investors especially coming in large numbers. So in respect to that, your question about sustainability, I would say the CBN should just stay the course on that is maintain the orthodox monetary policy, and also be the more orthodox monetary policy, which is definitely predictable and certain, and kind of douse uncertainty, reduce uncertainties, or rigidities that can create uncertainties in the mind of investors. Speaking of diversifying foreign exchange inflows, I would say for the CBN, that is they should just align the monetary policy with also what the fiscal policy is also doing. And in terms of also diversifying inflows, I would say that the CBN has its own role to play. Also, the federal government also has its own role to play in terms of improving businesses, which can definitely increase our exports. overall.
A follow-up to that, some experts feel like improved opportunities for diaspora investments, remittances, though we're in a time where global superpowers are very clamping down on anything that will bring remittances with tax and all that, and also unlocking wealth from our assets, national assets, which can also boost foreign exchange inflows. They use things like what Saudi Arabia has done with Saudi Aramco, that's improved FX inflows for them, or even UAE and their oil and gas state oil companies. So do you see those kind of ideas critical from the fiscal side to support what Monetary is doing?
Yeah, so for
boost our inflows,
for the diaspora remittance, I would say, yeah, it's quite commendable, and it also shows the resilience of Nigerians as a whole, because we definitely know the diaspora remittances from Nigerians that have gone abroad. So, yeah, the Japa wave had a negative toll, or it had a toll on businesses. But at the same time, I would say it also had a positive impact on the Nigerian economy as a whole. Because without the Japa drive, we won't be talking about diaspora remittance. So the Japa drive also kind of improve diaspora remittance for the Nigerian economy as a whole.
Let's go to a very big issue that impacts the banking and, of course, financial services, the cash reserve ratio. Some experts say it's one of the highest in the world, 50%. You wrote your last report when the central bank came out with this forbearance on some banks, and you advised that it's time for the central bank to take that bold step to ease the environment for banks by cutting the CRR, cash reserve ratio. Can you elaborate further on that? How critical is it at this time to take that decision, even as we await the big decision tomorrow of the MPC? And what's the assessment on the forbearance issues? Do you see that it's improved and banks are compliant?
So speaking of the CRR, yeah, it's currently one of the highest in the world at 50%. And the CRR at 50% is quite topical in the sense that we're coming from a point where it used to be arbitrary. The previous administration CRR was arbitrary, so there was no kind of mechanism or way to be able to tell what it was. So banks were getting CRR debits without which were not explainable, which you could not, which was unpredictable, which was kind of unpredictable. Like I mentioned earlier, that certainty definitely gives minds to investors. So now CRR 50% definitely it gives it's clear that it is at 50%. So everyone knows that 50%, but it is still quite high. In the sense that we did our analysis and we saw that just in 2024 alone, due to the additional CRR debit that the banks have to keep with the CBN, due to the increase in CRR to 50%, we estimated that the banks have lost potentially around 840 billion. That's about the top 5 banks.
We should have been plowed for the real sector that really needs credit.
Which would have also improved their profitability.
Profitability too.
And speaking of forbearance as well, it also helped them in exiting forbearances. Because they need to be profitable to be able to exit forbearance quickly and also efficiently. And also it also improve liquidity for the banks. And also be able to also extend lending.
Which is very important. So you believe that this time the CRR will be reviewed?
I would say, I think it should be reviewed. It should be reviewed. They should cut it.
Okay, that's safe.
That's
it should be reviewed. Well, we don't know yet. I think that will be the major step by the central bank.
Yeah.
As we look at the financial market, the capital market is a very critical player in the economy. Exactly. And it needs to be leveraged. I mean, recently we had a conversation with a scholar who has so much knowledge about the market. He was saying that it's time that national companies of value like the Nigerian National Petroleum Corporation and the Nigerian Liquefied Natural Gas leverage the capital market to raise funds. The capital market needs to be attractive. Activities need to be on scale. What is critical this time? How do you assess the market, even as we have had the Investment Securities Act 2025 signed into law? Does that create the enabler to attract more activities and listings, centralized listings?
So the capital markets, yeah, it's a very dynamic market, and also it's an enabler, like you mentioned. So it's something that must be given the attention that it deserves, that is due, and kind of also managed properly, so that like you mentioned, capital can be unlocked to drive growth. And looking at the economy, definitely, Nigeria is a growing economy. So definitely capital is needed everywhere. Like businesses need capital and
long-term capital.
Long-term capital. Long-term capital, which is also patient. Patient, what we call patient capital. So which would definitely unlock value. Because for some sectors in the economy, to unlock value in those sectors, you need patient capital. Patient capital that will stay through the hard times until definitely the value is unlocked. So definitely, speaking of the changes we have seen with investment security, as definitely we can see new capital unlocked for the for players in the economy, and also I also like to include that definitely capital go where there's returns. So returns being improved will also facilitate capital. I think one of the major things we even like to highlight, I think their taxes have been streamlined now. So kind of also that streamlined taxes also prove returns, which will also attract.
The implementation will take place from January 2026.
So streamlined taxes improves return, which would also attract capital. Although the CGT capital against tax is quite high, so it's both on both ends. So it's just to create the balance at that point.
As we conclude, what's your outlook for the monetary policy trajectory? Do you see, is it going to be hawkish or dovish as we go into as we're already in the second half of the year?
I think for the second half of the year, we'll start seeing cuts. We'll start seeing it has been quite high for a long time. So, and inflation is already, and like the CBN governor had mentioned, they want inflation to come down before they can start rate cuts. And we've seen inflation at 22%, MPI at 27%. Real interest rates return is already positive. So it's to balance it out, we have to start seeing.
So we expect a dovish approach.
Dovish approach, but not very aggressive. But
not very aggressive.
But dovish.
That will help businesses. That will also ease liquidity for banks and put the economy on track.
And market have started pricing it in. They're seeing yields in the secondary market also declined. So
something that can even make the household smile as they invest in the market. Thank you very much, Mr. Olumide Sole, the head of Financial Institution Research, Renaissance Capital, for these interesting conversations as we look at the expectations from the MPC meeting July 2025. All eyes will be on the Central Bank of Nigeria tomorrow as they make that big decision on all the parameters around monetary policy. Thank you once again for the time, Mr. Sole.
You're welcome.
To our viewers, I believe you enjoyed this conversation on the expectations from the July 2025 Monetary Policy Committee meeting, already beginning today, and tomorrow, which will be the big day for decision. Log on to our website and our platforms for the big decision that will be taken by the central bank tomorrow, the expectations, and all that will come with that. Till we come your way again, I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.